Hey, West Metro Denver, I'm Susie Stewartson with the Summit team. December market reports are usually predictable, but this one wasn't. We saw some seasonal patterns, but yes, also a few numbers that haven't shown up in over a decade. And those shifts matter whether you're thinking about buying or selling, or just trying to make sense of where the market is actually heading, and not where the headlines say they're heading. So let's break it down, locally and without the hype. So new listings, we had 285 single-family homes hit the market in December. That's normal for the holidays, but here's the standout. This is the lowest December for new listings in more than 10 years. And what that tells us, sellers didn't rush to test the market. Many simply chose to wait. That hesitation is important and signals uncertainty, not distress. And for buyers, fewer new listings means less choice, but also fewer competing offers. If you're prepared, this is one of the few times of the year where leverage quietly shifts in your favor. Now, active inventory, there were 1,124 homes actively for sale at the end of December. That's a seasonal dip, but it's still the second highest December inventory we've seen in over a decade. Translation, homes are lingering longer. Inventory isn't exploding, but it's not evaporating either. Buyers finally have options, real options. And sellers are no longer insulated by scarcity alone. So presentation, pricing, and condition now matter more than timing. Now, pending sales, we saw 427 homes go under contract in December. That's nearly identical to last year, but also the lowest December pending count in more than 10 years. Now, here's the nuance. This isn't demand disappearing, it's demand narrowing. The buyers still are active, qualified, intentional, and selective. They're not rushing, but they're buying when the numbers make sense. That's what a stable market looks like. Now, closed home sales, 647 homes closed in December, an increase over November, yet still the third lowest December in 10 years. And what this reflects, closings are happening, but with friction. More inspections, more negotiation, more diligence. This is no longer a speed contest, it's a decision-making market. And honestly, that's healthier than the chaos we came out of. Now, days on market, median days on market came in at 33 days. That's slightly lower than last 3 Januaries and still the highest December we've seen in over a decade. Now, why this matters? A month on market is no longer a red flag. It's normal. Buyers can breathe. Sellers need to lead with value from day one. Homes that miss the mark early don't get rescued later. The market is patient, but it's not forgiving. Prices. Median asking price was $689,000. Median close price, $655,000. Asking prices rose over the last 2 months, and that's where things get interesting. Close prices are the lowest of the year and about $10,000 lower than the same time last year. Remember, those closings reflect contracts negotiated 30 to 45 days earlier. Now, what this tells us, the market didn't reward optimism, it rewarded accuracy. Buyers paid for value, not ambition. Sellers who priced with today's reality closed cleanly. Those who didn't. Expired listings, this is a stat that really jumps off the page. 493 listings expired in December. That's nearly double from recent months at the highest number of expireds in any month in more than 10 years. What's driving this? Overpricing, full stop. The market has moved on, but some pricing strategists haven't. So when a home sits too long, buyers assume something's wrong, even when nothing is. The data is clear. The market is punishing hesitancy and unrealistic expectations. Months of inventory, we're now at 2 months of inventory after half a year at 3 months. Now, why that matters? 3 months is the textbook balance. Dropping to 2 doesn't flip the market, but it does tell us buyers are slowly absorbing inventory again. With rates hovering in the mid to low 5s and plenty of choices available, this remains a negotiation-friendly market, not an emotional one. Final thoughts. West Metro Denver has officially settled into a stable, rational market. Not booming, not crashing, but balanced. Prices are steady, inventory is workable, and buyers finally have space to think. Sellers who adjust with sharp pricing, strong marketing, and realistic timelines are still getting excellent results. From Wheat Ridge to Arvada, Lakewood to Golden, the story is consistent. This market rewards strategy, not hope. January often brings a subtle pickup, and we've already had an unusually warm winter that often brings buyers out. Rates tick down again, which could nudge activity, but this is no longer a market that reacts overnight. It moves deliberately. And honestly, that's a good thing. If you want to know what these numbers mean for your neighborhood, your price point, and your next move, drop market in the comments or reach out directly. I'll break it down specifically for you. No generic charts, no national noise. I'm Susie Stewartson with the Summit team, keeping you one step ahead in West Metro Denver real estate market.